Hello, XRP community. I'm Leo, and welcome to this in-depth look at the evolving landscape of XRP spot ETFs as of November 27th, 2025. With XRP currently trading at $2.21, recent data shows these funds attracting significant attention from institutional investors. Over the past 2 weeks since their initial launches, total inflows across major issuers have surpassed $800 million, according to aggregated reports from fund disclosures and on-chain trackers. This includes notable contributions from Canary Capital's XRPC ETF, Bitwise's fund, Grayscale's GXRP, and Franklin Templeton's XRPZ. For clarity, these figures represent net positive flows into the ETFs, which back their shares with actual XRP holdings custodied on the XRPL. A quick but essential disclaimer: this discussion is for educational and informational purposes only. It is not financial advice. Cryptocurrency markets are volatile, and you should always perform your own due diligence, consider your risk tolerance, and consult with qualified professionals before making any investment decisions. To set the stage, let's examine the mechanics of these ETFs. Spot XRP ETFs allow investors, ranging from retail participants to large institutions, to gain exposure to XRP's price movements through traditional brokerage accounts without the need to directly manage wallet security or regulatory compliance issues. When shares are purchased, the ETF provider acquires XRP on the open market or through over-the-counter desks, effectively removing those tokens from circulating supply. This process is transparent, with daily net asset value, NAV calculations, and holdings reports mandated by the SEC. For instance, Canary's XRPC ETF saw $58 million in trading volume on its debut day, followed by $26 million the subsequent day, per official filings. Bitwise's fund has accumulated $168 million in assets under management, AUM, in its first 2 weeks, including $18 million in inflows reported for November 26th alone, as confirmed by CEO Hunter Horsley in a recent statement. Drawing from real-time discussions on X, this momentum is generating widespread analysis. Analyst at Chad Steingraber posted yesterday, "In the first year, the XRP ETF funds will be relentlessly aggressive. There is only one way to slow them down. The price has to go up. There is no plan B." This reflects a common view among observers that sustained inflows could exert upward pressure on XRP's price as supply tightens. Similarly, at XRP, CryptoWolf noted the anticipation building around potential filings from larger players, patiently waiting for BlackRock to file for an XRP ETF. Such posts, with hundreds of engagements, highlight the community's focus on how broader adoption might amplify these flows. On-chain data provides concrete evidence of this absorption. Trackers like those from XRPL Explorers indicate that ETF custodians have locked away approximately 362 million XRP tokens to support the $800 million in inflows, equivalent to about 0.8% of the circulating supply of roughly 45 billion tokens. Exchange order book depth for XRP has notably thinned, dipping below 500 million tokens on platforms like Binance, according to Kaiko Analytics. This reduction in available liquidity isn't hypothetical, it's observable in real-time metrics. For example, at the CryptoSquire shared, ETF clients just scooped $21.81 million in fresh XRP. Total holdings now sit at $676,490,000. Quiet accumulation is over. The big wallets are moving. These inflows align with Cointelegraph's November 26 report, which detailed $21,811,000 net positive for XRP ETFs, outperforming Solana's $8.1 million outflow on the same day. Why is this happening now? The catalyst traces back to the regulatory clarity achieved following the resolution of the long-standing SEC case against Ripple in late 2024. That outcome removed the security classification overhang, paving the way for compliant ETF structures. XRP's underlying technology, enabling cross-border settlements in 3 to 5 seconds at costs under a penny, positions it uniquely for institutional use cases. Ripple's network already facilitates trillions in annual transaction value through partnerships with over 300 financial institutions, including Santander and SBI Holdings. As at XP, market observed, the XRP ETF era has just begun. Still waiting on the giants to enter the game, BlackRock and Fidelity sitting on the sidelines means we're yet to see an enormous pool of untapped institutional capital waiting to flood into XRP. This untapped potential is a recurring theme in high engagement threads. Let's break down the inflows step by step for a clearer picture. Step 1. Launch phase. Approvals in late October 2025 enabled the first wave, with Canary, Bitwise, Grayscale, and Franklin Templeton going live in mid-November. Day 1 flows for Grayscale and Franklin combined reached around $130 million per initial disclosures. Step 2. Acceleration. By November 25th, XRP ETFs recorded $35.41 million in net inflows, contributing to a broader $295 million across crypto spot products that day. Yesterday's $21.81 million marked the 8th consecutive positive day, pushing cumulative totals past $586 million in the first 8 trading sessions alone, as reported by TradingView. Step 3. Token impact. At current prices, these flows equate to absorbing roughly 80 million XRP per recent 24-hour periods, data echoed in Afterblockopedia AX post. XRP ETF assets surged past $628 million, absorbing nearly 80 million tokens in 24 hours, a stronger initial response than Solana's ETF debut earlier this year. Step 4. Market context. While Bitcoin and Ethereum ETFs saw modest recoveries, $21.12 million and $60.82 million respectively, on November 26th, XRP's performance stands out, especially against Solana's outflows. Broader web sources, like CoinGape, note, the supply of XRP on exchanges is declining, which increases concerns that inflows may exceed outstanding supply. This dynamic could lead to a supply-demand imbalance over time, though markets remain unpredictable. An analogy to illustrate, consider XRP's circulating supply as a reservoir feeding multiple streams. ETFs act as new outlets drawing water steadily. If inflows persist at $50 to $100 million daily, the reservoir level drops, potentially concentrating flow in the remaining channels, including spot prices. CryptoZaras captured this in their update. XRP's new ETFs absorbed approximately 80 million tokens in its first day, pushing total AUM to $778 million and outperforming Sol's ETF debut. 4 XRP ETFs now active. Canary's XRPC leads with $331 million, Bitwise at $168 million. Upcoming launches, such as 21 Shares Toxar on November 29th, and potential WisdomTree, Invesco Galaxy, and ProShares products next week, could further expand this reservoir draw, as flagged by at KJK Spider 2000. Community reactions on X are measured yet optimistic, blending data with forward-looking commentary. Levi Rietveld shared a video analysis. The XRP ETFs are not what you think, prompting discussions on misconceptions around ETF mechanics. At Steph East Crypto broke the Bitwise news. Bitwise CEO Hunter Horsley just confirmed 18 million of inflows into the Bitwise XRP ETF yesterday. Now, $135 million in the first 3 days. With nearly 500 likes, it underscores verifiable institutional demand. Even in Japanese language posts, like at Clover's translation of historical context. XRP ETF launched right when, not like Bitcoin's post-ETF dip. Engagement crosses global lines with 148 likes, addressing potential viewer concerns. If the price hasn't reflected these inflows dramatically yet, hovering around $2.21 amid a recent market correction, it's worth noting technical patterns. XY Crypto charted. GM, GIR XRP, GIR ETF, 2021. Cycle. It was delusional. 2017. Cycle. It wasn't even a dream back then. This evolution from skepticism to reality mirrors a Wyckoff reaccumulation phase, where sideways action allows absorption without immediate spikes, as detailed by analysts like at ChartNerdTA in prior threads. Historical precedents, such as Bitcoin's months-long consolidation post-ETF launch before recovery, suggest patience in such setups. Common myths warrant clarification. Myth 1. ETFs enable unchecked manipulation. In reality, SEC oversight requires audited custodians, real-time reporting, and no leverage in spot products. Transparency is built in. Myth 2. XRP's value is indistinguishable from Ripple's corporate performance. Fact. The XRPL is decentralized, with XRP's utility extending beyond any single entity via open source development and monthly escrow burns, reducing Ripple's holdings. Myth 3. The window for interest has closed. Data shows otherwise, with $644 million in just 8 days per Coinpedia, and projections from BitGet News estimating annual inflows of $7 to $10 billion as more issuers enter. This appears to be an early phase. Looking ahead, external factors could influence trajectories. Ripple's ongoing CBDC pilots, with over 20 central banks, and the upcoming RLUSD stablecoin beta, may enhance XRPL's ecosystem, indirectly supporting ETF appeal. Macro elements, like anticipated Fed rate pauses, add tailwinds, as noted in Brave New Coin's analysis. XRP has climbed back above the $2 mark, supported by improving ETF inflows and regulatory clarity. Head-end cash officials summarize the bullish environment. Increased institutional adoption, additional ETF approvals, regulatory clarity, bullish crypto market, Ripple expanding products. The entire scene around crypto has changed. As Johnny Crypto 00 added, 300 million XRP consumed by ETF inflows. The supply is shrinking. In recap, XRP spot ETFs have drawn over $800 million in inflows within 2 weeks, absorbing hundreds of millions of tokens and signaling structured institutional entry. This is substantiated by fund reports, on-chain metrics, and active X discourse from verified analysts. As Cointelegraph reported, BTC, ETH, and XRP spot ETFs saw net inflows on November 26, XRP $21.81 million. The data points to a maturing narrative around XRP's role in payments and beyond. For those seeking more, explore the cited sources and trackers directly. If this overview provided value, consider liking the video to signal its relevance to the algorithm, commenting with your thoughts on how ETF dynamics might evolve next week, perhaps sharing a key metric that caught your eye. Subscribe for continued breakdowns on crypto infrastructure developments, and share this with others in the space who might find the details useful. Thank you for your time. Stay analytical and informed.